Welcome everybody to Strategy Now here at MarketStream.live. My name is Joseph Cusick with the Cusick Groups, securities provided by MoneyBlock. With your Strategy Now updates, taking a look at the market overall, we have yields rising and shifts in market leadership. It's mixed note right now. We actually saw the Dow Jones average notch an new all-time high, up about 1% into the midday session. I also see the S&P 500 up about 0.3%. The Nasdaq, though, and this is where we get into the mix action, down about 0.8%. And really, what you're seeing is that the top end of technology is starting to cut into any gains in either the S&Ps or the Nasdaq, because right now, if you look at the financials, the industrials, as well as healthcare, they're all performing very well, up 3.2%, 2.1%, and 1.2% respectively. Now, as we had noted and continue to note and will note for a while, the Treasury complex continues to trade at a lower note on the price end. You see that the long end of the curve continues to benefit from rising inflation and fiscal stimulus expectations. I'm watching as the bonds tick right now. The two-year note right now on the short end of the curve is trading at around 0.88%, and the yield on the 10-year benchmark is right around 2.08%, which means that these yields have increased. If you look at the 10-year note specifically, about 25 basis points since the end of October. So in the last basically week, you've seen that the 10-year yield has gone up 25 basis points. If you look at the spread between the 2-year and the 10-year, it's up now expanded from 98 basis points when we talked about it in the beginning of last week to 120 basis points. What does that mean? All right, for those of you that aren't bond enthusiasts, it means two things. One is there is inflation concerns starting to arise. The other one is that you're seeing a clear rotation out of bonds and into other areas of investment. Who are the biggest losers when you see this type of yield increase? You're going to see groups that are rate sensitive, like consumer staples, which are down about 2.6%. Take a look at utilities. They've been under pressure for the last couple days, and basically the last week globally, down about 1.7%, that sector. And then telecom services, down about 1.7%. The economically sensitive financial areas, though, have been outperforming. They've been up about 3.2%. You think, well, why? Why does that benefit them? Well, a steepening yield curve is positive. That means that their margins are going to increase. If you look at the KBE that we noted yesterday, it's up another $1.28 today, or basically about 3.5% at 38.02. Rising interest rates help institutions like big banks and regional banks. And so we're going to continue to see that expand for financials in a positive way as this curve continues to steepen. Another area that we want to keep an eye on is going to be transports, and specifically we want to keep an eye on rails. They are, when all this talk about infrastructure spending and industrials being a benefit of a Trump presidency, these are the sectors that you could see more money rotating into. Rails in general are up about 2.1, or industrials are up about 2.1%. I'm looking at XLI right now. And if you look at names like Union Pacific, a ticker symbol UNP, that's up about $4 today, or 4.3%. This stock in particular is going to benefit from increasing commodity prices and growing expectations of large infrastructure projects. So when you see these kind of moves, or in anticipation of kinds of moves in, for example, expectations of not only infrastructure products, but inflation in commodity prices, again, because everyone has no idea what the new trade policies are going to be with the Trump administration. You're going to see that these sectors are going to be influenced. Again, if you look at the transport average, the IYT, It's up about 2.1%, and it's up to, in the last week, about 6.2%. So it's been an impressive move. Another sector that money is starting to potentially rotate into is the pharmaceutical and biotech names, as well as some into some healthcare space names. In general, you see this space up about 1.2%. Take a look at Pfizer. There has been some news out on Pfizer, so there is some headline boost there. But the bottom line is Pfizer's been up 4.6% today alone at $33.95. Biotech names have been off the charts. It initially was sparked by merger and acquisition. Then after that was muted because there was concern that a Clinton presidency would put some pricing controls potentially in play. That impacted biotechs. They were down big. Once it became more apparent that Trump had a chance and then eventually got elected, IBB, which is the biotech ETF, it just shot up. As a matter of fact, you see it up another $4.74 today at $289.69. Again, with this dial back of expectations of drug price controls in the next in this next administration, it's very interesting. So again, you're going to see that rotation potentially building there. We had mentioned that tech in general has been a drag on the overall market upside. We said that the NASDAQ was down about 0.8%. The three biggest names right now, Facebook, Google, and Apple. Facebook's down about 343 at 119.75. Google's down 759.69, down trading at 759.69, down about $25. And Apple's down to 107.45, down about 342. Basically, you're seeing a plethora of things playing out here. One of the biggest things that came out, and we talked about this in the overnight discussion yesterday and this morning, was the fact that we saw that the Nikkei was under pressure, and there was some speculation that a supplier to the iPhone, to Apple, Foxconn, was showing weakness. And there was some undertones that could be signaling some weak demand for iPhone 7. So we're going to watch this, and that's why you need to watch Overnight Action, where we bring these particular pieces of information to light, and that's why it's important to watch Nikkei stocks. These are the stocks, these are the suppliers, for example, to large cap tech here in the United States, like Apple. All in all, I think right now what you're seeing is the action today is where there's some rotational trade as investors are trying to figure out and assess what sectors are going to benefit from the potential policies that are going to rise with the Trump presidency. So there's going to be a lot of rotation, a lot of potential volatility. Vol is actually up a little bit. It was up ticking a little bit more today. It has muted a little bit, but still in the green. The VIX is at 15. So I think that we're going to still see some of these moves, and we're going to keep an eye on it. And so stay tuned to MarketStream.live. We'll update you 5 times a day. And next time that we're going to be on is at 3:30 Eastern time. We're going to be doing Tech Talk. We're going to be drilling down some remaining stocks that are going to be announcing earnings, as well as what's going on from a technical perspective and some names that we need to pay attention, as well as sectors. So stay tuned to that, 3:30 Eastern time, and then we'll do the closing bell at 4:30 Eastern time. So we'll see you then. Take care and have a great rest of the trading day.